Hey everybody, welcome. Example number 3, late calculation of your closing inventory. The requirement is, what was the value of closing inventory 31st December 2017? They gave us 7 January 2018, just right after 7 days of the year end 2017, the inventory valuation. And we don't know the 31st December 2017 inventory value, but after 7 days we know the value, and in between 7 days from 1st January till 7th January 2018 some transaction took place. Okay, this is inventory valuation. Bear in mind, according to prudence concept, inventory should be valued at cost figure, never at selling price. Okay, to do this question, this is a very popular question, very often comes in exam as a whole question or as a part of the question of your incomplete record. I will show you how to do it. Okay, there is a pro forma of doing it. All right. Okay, let's start with the pound figure. Inventory 31st December 2017. We don't know. X figure, let it be there. But from 1st January till 7th January, some transaction took place. We'll put it in and get our figure. Oops, what came up? Look at this. Okay. Starting with the sales. If you sell your inventory, it makes the inventory down. Okay, 31st December, after that, maybe 1st of January, maybe 2nd of January, we sold, making our inventory down. Okay, so sales plus sales return. Why? Because sales return makes your inventory up. Red return. You have to write return, not red. Bear in mind in the exam. Purchases are plus, makes your inventory up, minus purchase return per red. Goods stolen and goods drawings, both of these makes your down, the inventory down. Drawings and stolen. Yeah, and there we go. After that, 7th January, your inventory, you know the value is given at the top somewhere here. Have a look. There we go. That's the value at the bottom. Let's start with that value rather. 23550. Okay, now these figures we will put into a pro forma, but bear in mind the sales is included 30% markup. We have to exclude the markup, need to take the cost price only. How do you do? If you remember my conversion method of markup into margin, cost plus profit formula is always your sales, but bear in mind if the markup, your cost is 100%. You remember from our previous videos. Profit this time 30%, our sales is 130%. So the selling price here is 2080. If divided by 130 multiplied by 100, you get your cost, which is 1600, and this is the figure we will put into a pro forma. 1600 is a minus. There's another way of doing it. Let's assume the sales return this time. 260 divided by 1.3, easy peasy. You get the answer as 200. Yep. Oops, sorry, this is not a minus sign. Let me take my eraser. Yeah, this is a plus sign, blue pen. Okay, purchases is straightforward, 1030. This is cost price. Purchase return is also cost price, 60 should be minus. Goods drawings is 78 divided by 1.3, you get 60, it should be minus. And stolen is also at selling price. Look at this, these two are selling price, that's why we are dividing it by our margin to get the cost price, and I get 150, and that's it. Now we need to work backward system. This minus becomes plus, plus becomes minus, and you get the answer, which is 24190.